focus on taking things out towards the bottom, and you get a beautiful sell-off like so. Okay guys, so now we're gonna go back to our supply and demand and look at these areas where we get these big moves in the market. Again, as we talked about in the video, these, you know, you might have these higher highs, higher lows kind of action, and then you just get this big blow up, and then we want to see price come back to that level, and then we go from there. Vice versa with the sells, big sell off, come back to those areas, sellers into the market, and we go from there. So let's go to our real charts. Let's go to our real charts real quick and see exactly how that would look. Let's look at current price action and see where and how we can find some stuff. So for example, right, we have perfect textbook level and textbook example right here. So we have a range of consolidation. Now three reasons why price sold off here, why we could sell off here. And the first reason is when we talked about in our market structure who's in control video, understanding directional bias. Market can do three things. It can retrace, reverse, or expand. Well, it can only expand from consolidation, right? So when we get consolidative action like this, where we just price range and making highs and just playing around, you know, taking lows, whatever, we get that expansive move to the downside. As you just learned in our last video, we want to take our high to low, and we want to actually look at our premium and discount levels. Well, you see our premium is here, like already here, deep into this level. So we know price more than likely can react from areas like this, where it's like a fair value gap, or we can come to the extreme, you know, drag this over the extreme levels of this consolidation, tap into the 50% of it. So that's, if we was to look at this level right here, you see it came right to the 50% of this entire range, and then we sell off from here. So for me, for example, I would say, hey, like, what time is it? 10 o'clock in the morning, price is running up. I want to utilize time to get the best entry at the top, and then focus on taking things out towards the bottom, and you get a beautiful sell-off like so. And that's an example of seeing price just come, start to expand, and then you get this small doji candle. If we zoom in, you get this small doji candle, and then you get that expansive move to the downside, and it's just all one way. That's exactly what we want to see and how we want to trade. Let's look at some buy examples. Here's a buy example of price like not going to the 50%, I believe. So we have like price consolidating again, and we're making like lower, higher low, higher high, higher low, right? We expecting the higher high or a higher high right here. Well, what price did was consolidate first right here, created some type of low, and then just blew through the water. So in my opinion, I'm taking this high to this low, this low to this high, and as you can see, we come to the 50% mapped out with this fair value gap, of course, which we haven't talked too much about yet, but mapped out with that, we tag it, and then this is actually the price action. Remember I said, hey, you don't gotta catch the bottom. This is during Asia. This is actually the price action where I caught a like a 1 to 44. I talked about that video on YouTube. It was like really tight stop loss. I think it was like 7 points, and I ended up exiting like up here. It was like a 1 to 40 something. This kind of price action is started from, hey, this expansive move. Like we literally were consolidating, big move. We know demand into the market here. More than likely we want to come back into that range, right? So remember that low to high, you don't got to come back to the exact candlestick and all that stuff. You just want to come back to that range, that under that equilibrium 50% point, and once we get under that point, we look and we see if price can actually, you know, buy up or buy or whatever, even small stuff like this. So we are consolidating, and you don't always have to consolidate, but there's a lot of examples of it right now. Sometimes it's just like normal price action, and then we get a big move, right? But right now it's just sideways. We get an expansive move to the downside. What we want to do is take our low to our high, high to our low. Even if you pulled it up here, if you wanted to, from this high to this low, same exact thing. Let's say you want to enter on a 618. Again, you can enter on a 618, put your stop loss where you feel need, and then use time, of course, which we'll talk about when we actually lay everything out, and then easy little trade. And then you get, now the difference between this supply zone and like this supply zone, two things. This supply zone did what? Let's actually backtrack a little bit here. So this supply zone did what? Well, we got a low, or a level of demand right here, you could say, because market just bought in. Or you could just say, hey, this is a low, right? I like this low right here. These lows have to be respected or disrespected. So this high actually took out those lows, but this high didn't really do the damage. We did weak price action right here. What actually did the damage was this candle. So what you can do is take this smaller range if you wanted to, or this entire fair value gap of this candle right here, if you wanted to. And you say, hey, somewhere in this area I want to enter off of. People trade that way as well. I'll teach you that in the later videos. But this is completely different from this, because this took out a low and we got this displacement candle, which shows just like extreme strength, no other action going on. This candle here, you could say this is a displacement candle, but it didn't take out anything to the downside. It literally stopped, respected this level, and then started playing around. It then took a low out, and then we come here and then we continue down. I wouldn't really want to trade off of those levels at all. Again, big move, sharp move to the downside. If we come, look, we drag this over, I'm pretty sure we get a reaction from this level, because this is where the price, the money came from. Right, so from that one single level, we got this big move. That's how you will catch these large moves in the market and go from there. So that's pretty much enough. I mean, I could still talk about demand and like all these things and show you more examples, but it's pretty self-explanatory. You just have to look for points in the market where price makes these strong moves. The market doesn't usually just move up in one motion like this. So when you see it, you can say, hey, well, supply was here in the price, you know, or demand was here in price, supply was here in price. This is moving up. You can say it's demand, but it's not strong. That's why we take the lows and then we buy up. Big, strong move, consolidation, just moving to the upside. Again, just moving to the upside and then continue on from there. So now we're going to go into drawing out these zones, breaking everything down on that end, and then I'll see you in the next video.